85% of customers lose money. Europe is in a weird state. You don't really have an ability to plug into some API and it works. Las Vegas has better odds for you to make money than there.
Yeah.
But if they die this year, then I'm not going to make money from them next year. You can literally like click on a button and listen Elon Musk to give you an earnings call, and you can see what they're thinking and why they're doing something. So the minimum amount what you need to put in there is 500 million. Pretty quickly we realized that this is all shit. Banks are making like fuckloads of money because
Cool. Good day, Martin.
Good morning.
So you have a company called Lightyear, founded in 2020. So what does the company do, and how big is the company in terms of revenue?
So we started this company because we realized that people in Europe are not really investing well, and the people who are investing are getting screwed quite badly. So if you look into the European market, then banks are effectively dominating everything, and banks are expensive, slow, ancient. It doesn't really work well in today's environment. So we're building an investment platform what will focus on making sure that everybody in Europe, in whatever market you are, whoever you are, you have the best possible access to the public markets around the world. On the size of the business, we haven't actually disclosed the revenue side. We just passed 1 billion AUM on the asset side. We're growing about 3x every year at the moment.
How many employees?
We have 70 employees at the moment.
That's amazing. 1 billion assets under management in basically, what is it, 5 years, right?
Actually, a little bit less because we started in 2020 and then it took us a year to get like bare minimum MVP out there. And then it took us another year where we managed to get the European business going. So it's in like actually a handful of years.
Okay, so just for people, I mean, that's crazy. Just for people to get a sense of, online investment brokerage business, you are looking to expand your assets under management, how much people have invested through your platform, and you make a fee on that amount, right? And that's your brokerage fee. That's I suppose the business model. Would it be correct? Maybe, and maybe there's something else you can tell me. Would I be correct to say that the margin that you're charging roughly on your assets under management is about 2%? So we're talking about 20 million revenue. You know this game, like warmer or colder? So you can give me if I'm neutral, warm, or cold.
So it's quite a bit more complex in that sense. Okay. Like where do we make money? So our kind of fees are structured in like two kind of main categories. One are like interest-bearing fees, and other is transactional fees. So like the way we think about in Europe is that it doesn't really make sense for me to charge you a fee when you're just keeping money on my platform. So contrary, if you go to the bank and you keep your money in the bank, and then you have to pay this management fee and success fee, and then like lots of other hidden fees there as well. Like for me, it's like I don't really pay a lot of money, me as a company, to keep your money on the platform. So we look into the kind of the ways what makes sense most. And in Europe, like something what makes more sense than like a percentage-based asset fee is more about everybody in Europe has wrong currency. So like a lot of people in Europe has euro, but a lot of investments go into the dollar. But then there is like 15 countries what doesn't have a euro, and then they need to have investments in the local stuff and then the US stuff, and also you want to buy TransferWise or Wise from the UK in pounds, and then you have Hong Kong dollars and so on and so on. But like FX is something what banks are overcharging. So like the way they think about the fee is that this is like really good opportunity for us to lower FX fee 3 times compared to the bank. But at the same time, we actually make quite a lot of money because FX by itself is quite cheap. So we are able to actually have our margin there. So this kind of transactional stuff, then you have transactional as when you're buying and selling stock, and then you have interest bearing stuff. And interest is more about, not so much about asset under management. It's more kind of what money you're able to, how do you able to put that money to work? Like, are you able to put the cash to work in the central bank account, or you're able to get some credit line going on? So this is kind of interest revenue and so on. So it's like twofold, and depends on the age of the company. These are like in the different stages. So if you take like the biggest brokerage in the world, they are all effectively kind of interest side of the world there. If you are like newer company and if you take like this hostile stuff like all the CFD brokers and whatnot, they're all transactional side of the things. So it's like a different view. Like we are somewhere in the middle. But yeah, we're mostly focusing on building up like amazing service, what actually allows you to do this kind of stuff. Because today Europe is in a weird state. You don't really have an ability to plug into some API and it works. You have 30 markets, everybody has their own language. You need to build every regulator, every currency, every exchange, and so on and so on. So that's the base. And then on top of that, you're able to build actually rather efficient service.
Okay.
Martin, what has been key for this business to kind of scale 3x every year? What the heck are you doing? Teach us, everybody listening, what to do for a business to do 3 times per year growth.
I think like the main point for us has been trying to build like a thing what really makes sense and what makes sense for a customer. Like I can give you an example. If you look into like various kind of brokers who have been trying to build a product, kind of copying maybe this kind of meme stock world or Robinhood type of trading and all that stuff, which is it's out there, it's really visible, and you're getting a lot of pressure to build this kind of active trading solution. The problem with that is that people lose money. So if you're like, it depends what are you building. So I can like show you that a lot of people who try to start actively trade, like really actively, it's like effectively gambling, and then you lose the money. So I can like, let's take an example, the CFD brokers, what I have been sharing, which are like regulated differently. They're like effectively gambling companies. You can go to their homepage and there's like a banner what says that 85% of our customers lose money. Yeah, something like that. Can you imagine like Las Vegas has better odds for you to make money than there. So in many ways, it's insane. But if you think about where's the money in Europe, you have 20 trillion euros in European countries, which is invested at the moment. 20 trillion. It's like huge amount of money. And that money does not gamble or trade. This is one way or another is kind of a long-term view, like taking a long-term view. So for us, it's the thing what we want to do is not to get you like get rich quick and make these amazing deals right away. It's more about how do you put your money work in a long-term view. This way you don't lose your money. And for a business side of the things for us is also like the target market is like orders of magnitudes bigger. Like the opportunity in Europe, like trying to take the 20 trillion market is huge. And now you can charge a little and make a lot of money because it's a scale business. So what we are doing is that we are putting a lot of effort making sure that this is our platform. So this is the customers, the type of the products, the way we are building it. And sometimes it's lots of pressure and we need to go against that pressure because it's easy to make lots of money when people go and trade a lot. Yeah, but if they die this year, then I'm not going to make money from them next year. So I can give you an example. The kind of type, the product we have put together is that roughly like 90% of our customers make money. So it means that effectively everybody who comes in makes money. And it's not like, oh, we have some magical formula. It's more about you take a position which are more careful and a long-term view, and that's why you're like more prone to make money. So time in the market is important. Our customers double their account size in 6 months. So it's not that again they get rich, but it's more about they trust the system. It works for them. They bring more money on the platform, so it starts to work. Therefore, these customers effectively never churn. So I think like our retention was again something like 90% or somewhere there last year. Means that all the customers who joined, I don't need to acquire them again. So it's like everything is built in a way that next 10 years, this all makes sense for me and my customer. And therefore I'm able to scale from top of that platform.
You said 6 months to double their investment?
No.
Is that correct?
No.
You said something
double. No, the money on their account. So if you think about, so we're in the trust business. And we are newcomer in this wealth game. So it means that our customers usually come in and put some money on the platform. Okay. So, and then they're going to feel out what's going to happen. And then if they feel trusted and it's good, then in average, they bring 2x more money on the platform in the next 6 months. And then they're going to triple in the next 9 to 12 months. So it means that like you build a trust, you build a good product, and that makes sense for them.
And here, like on a tactical level, this all sounds good in theory, but on a tactical level, what specifically do you do to ensure that the customer feels trust? They feel, I guess, the platform is working. What is on a tactical level? What is happening to the customer first facing? What do they see as a customer?
So if you're asking how do we build trust, then in many ways, like you can't really buy a trust. You need to kind of earn the trust. So for us, we are extremely well regulated. We are regulated in the UK and in Europe. We are like extremely audited. Like everything around kind of regulatory aspect is we have done like to the maximum effectively. But then you're going to go into like what is the product. So if I'm going to try to like if you sign up in our service and I'm going to start sending you like notifications that go and buy Tesla because you're going to get rich quick, that's like removes the trust on the platform for that type of customers what we're building. So for us, I can give an opposite example is that we have taken a decision that ETFs in our platform are for free. So why ETFs are for free is that most of the ETFs, or like the biggest and common ones, are really long-term, diversified, like good instruments to get started, and like the backbone of every kind of long-term investor's portfolio means that we are gravitating towards the product what makes sense for them. So if that product makes sense, we're bringing more of these type of customers in. We are earning again more trust because we don't tell them stupid things. So lots of stuff around that. We're putting a lot of effort of trying to explain what's happening in the market. So we launched our AI suite where we look into what's in your portfolio, and we're looking also into what's happening in the market. And like if something interesting happens, Amazon moves 10%, then in our app you have a view that, hey, Jeff Bezos did these kind of things, or these kind of results came out, and now that's why it likely moved. Or you can have, we're kind of scraping the world's kind of professional investors' opinions and trying to pull it together why this stock is good and why it's bad. So you have, again, a better option to make a decision why this makes sense or not. And like we're building it more and more, like making sure that you have all the information. You can literally like click on a button and listen Elon Musk to give you an earnings call, Tesla's earnings call recording, and you can see what they're thinking and why they're doing something. So giving you this information field is rather important again.
Amazing. Question. I mean, I've checked other interviews with you, and there are these questions. I think a standard question always: how do you compete with probably the more transaction trading driven platforms like eToro, maybe Trade Republic? I don't know what their focus really is, if it's trading or investing more. But so, question is, who are your bigger direct competitors in Europe, and how do you compete with them? In my kind of perception, this is a great business, especially if your focus is long-term money investment rather than trading and not gambling. But you are in the meantime competing with, like you mentioned, also the banks that have huge budgets, big customer acquisition, budgets for marketing, and so that's where you need to compete. And especially if you provide meaningful products like ETFs, right, for good reasons, for free, you're subsidizing. Maybe not subsidizing. You're providing meaningful products for free, but therefore that's a cost for you that you need to cover somehow later on, which adds to the cost pressure that you have. So how do you manage that?
Roughly 5 questions here. Let me try to go.
Sorry, many questions.
But
let's talk about the competition. One, and
good.
Second is, because you have very appealing pricing. How do you manage to make money in the long term?
So let me do the ETF one really quickly. So ETF cost itself is rather small. So like the part what we need to pay to actually transact on ETFs it's not like 10 euros plus 0.2% plus 1% FX what you have in a bank. That's insane. You should not have that. So like we have rather good infrastructure and the costs are minimal. So you can figure it out. It's like effectively a marketing budget that we have amazing product. People come in. This is not the place where we need to earn money, but we also are mindful that we don't lose a lot of money there. It's like tiny amount. So it's fine for us. So the key here is to build an infrastructure, and the infrastructure was able to do that. Like, I'll give you an example out of that. Like, if my mom goes to the bank and wants to buy something, she pays everything double. If I'm going to do things, I'm going to have everything 2x cheaper. So because I have maybe more knowledge, I know where to call, who's going to get me a better deal. Maybe I can able to choose the provider. If I have $1 billion, then bank pays me. So this is the game, how it works effectively. Right. The more volume you have, the cheaper you have. To give you an example, the money market fund, what's our platform, the minimum amount what you need to put in there is 500 million. But if you're able to put the 500 million in there or get the deal or get access into that money market fund, then you get like amazing rate. And the rate is so amazing that I have friends who are startup who have 100 million cash and they're using some Goldman product, and their rate in that specific Goldman product is worse than the money market fund, what you can buy in our platform and put €5 in. So like this is the kind of the scale of the infrastructure. And that's why it's important to build that. So we're able to get like prices down. So that's one big part what we're doing and what we're focusing on. And like this year we got central bank account, which not many non-banks have ever gotten, to actually get these kind of products going there. We got access to Clearstream, direct access, which again, not really many companies are able to do that. And what it allows us to do is to minimize the cost, give you the amazing service and access to these products. So lots of infrastructure. Okay, let me park this for a moment and go back to the competition. So competition goes into, I think, twofold. So one is where's the money? And second is who's able to potentially shake the market. So reality is that 90%, probably more, of today's investors' money is in a bank. So most of the money is in the bank. So like technically thinking, the competition is where your money comes from, and it has to come from the bank. And it's not like one bank. It's every market has like 3-4 banks who effectively have every single European market has these top 3 banks. And like, I don't know on the top of my head Latvian market, but it's probably like Swedbank and some other.
SEB, Luminor.
Yeah. All the Swedish stuff. Same in Estonia, same in Sweden. Most of the time there's some other players there. Same in Germany and UK. So in UK, most of the money is in Barclays. There's not a single player in the kind of new brokerage world who has managed to shake anything up. So in that sense, yes, we need to go there. The thing is, banks, A, don't want to build investment products, and B, they don't know how to build it. So why they don't want to build it is that go and take, like I'm sometimes challenging all these banks who are claiming that they are like really investor focused, is that take their annual accounts and read them. And when do they start thinking and talking about investing? Nobody talks about investing. Why? Is the money is in credit. So bank's job is to give you a credit. All these Swedbanks and whatnot, they give you a loan, your business a loan, and million other things, and they make so much money out of that investment part is like minuscule. So that doesn't really matter. And if it's a minuscule, they don't put any effort into it, they don't put any money in it, they are not making it better. When did any of the banks in your local market made a significant improvement in their investment product? Like probably 20 years ago. So nothing has ever happened there. But the money is still there because Europe is dominated, and banks have 2 things. They're localized and they are quite trusted. So these are 2 elements what keeps money in the bank. So localization, that you have your local taxation, tax wrappers, language, currency, all this stuff, and also the inherent trust. But this is changing. This is changing because now we're able to build products which operates in every single market in Europe, but also localize it. So make sure that you have the local taxation, everything around that, you have a trust around that, and so on. But people haven't managed to build that yet. So this is happening at the moment. So let's say that banks are not really doing anything. So they are like dying breed in the investment landscape. So if you go to the other end, like the companies what you mentioned, So I would throw eToro out of there because eToro is a gambling app effectively that their focus is ultra risky bets, gamble a lot, lose lots of money, and like this is their focus. There's some other players like Trade Republic, what you mentioned. They're probably one who's like understand how to build a product. They actually have done a rather good job out of this, and they have grown quite a bit. But they're a German product, so they focus on German. So it means that everything is in euros. They don't give you. They're never going to give you a Latvian investment account or Hungarian investment account, or they don't bring you the local instruments in. They don't give you even a US dollar. So if you're buying like Amazon, you're buying at Amazon in still euros. So you don't have the dollar, which actually Amazon is dominated. So like for them, I would say that they are a really good player, but they haven't figured out the localization part.
Right.
And that's a big problem for many kind of big market new brokerages because they forget that Europe has more countries than their big one. So I think the extremely good example is Robinhood, who is really good product in the US. And then they had an idea that, it's like UK is like 51st state of America. It's like, fine, we come in and we give you the amazing product. And then they come in and face plant really quickly. And like, why? Because half of the product is kind of illegal in Europe. So why? Because all the ETFs in Robinhood platform are from US, and Europe has MiFID II regulatory regime what says that ETFs have to be from Europe. So for them, they need to plug into some European markets to get these. But also, they don't really have pound or euro or Norwegian krona in their platform. And I think it's fine if you're trading a lot and you're taking this kind of position. But if you want to build a product where people invest in the long run, you have to have euro. You have to have your local stocks. You have to have the local taxation. Because if you don't have this, then the real money will not come to your platform. You will be staying as a play money. And I think that's a big mistake. What people are forgetting in Europe is that you have to localize. And like, my background is from TransferWise. Actually, a lot of our team, my co-founder is from TransferWise. And like there, what we saw a lot is that it's really hard to build a product that works in every single market. But if you do, then it's really hard to compete with that because localization matters.
Nice.
Interesting. I'm more curious also on how did you kind of get and acquire these first 100 customers? And then after that, we'll have the follow-up question on that.
We probably acquired the first 100 customers before we built anything. So when we tried to figure out, like effectively at the time when me and Mikkel is my co-founder, probably one of the brightest engineering minds in the world, actually, we start talking about what are we doing and like how do we solve this problem in Europe. So what we did, we took every single person who invests, we literally sat down with them and was like, okay, what's wrong? What do you want to see? And like not just like friends, but also like we went to the financial influencers, banks and whatnot, and like just tried to get an understanding like what needs to happen to change this. And obviously we got like a lot of ideas, a lot of resistance because why would you go against the banks and all this stuff? And it's like good enough and all like stuff what I don't think makes sense. But going over this, I think like our first 100 customers came from these discussions. We spoke so many different people and tried to get like understanding how do we build something what will solve not only your problem, but like problem for like 500 million people in Europe. And when we launched our first product, then these customers already started using us or like at least testing it out. And then we got the next feedback. And I think like the second answer to this was we have been putting a lot of effort. I wouldn't say like a marketing, but it's more about trying to explain people what are we doing. And I think like it's more about like comms and press and everything around that. So like the moment we start like sharing what are we doing, we went quite strongly into like the biggest outlets in the UK, sat down the journalist and tried to explain like, hey, these are the things what we're doing. This is why we're doing it. Like, do you realize that how bad is the situation in Europe? And like, let's try to figure it out together. And like that gave us also a massive boost because they explained our situation to their readers and so on.
And what about marketing? Like, how much do you put right now into ads, into marketing channels? And because why am I asking this? Because I think it's very impressive to scale to. I think you have 300,000+ customers, or how many are active customers?
So something like that. Yeah.
I think it's crazy. So I don't think it's just word of mouth and having a good product. So, Martin, what the heck are you doing? Tell us, like, specifics.
I do think it's mostly actually word of mouth. So it's like so word of mouth in some different pockets. I think like more than half of our customers come still from organic, and organic like various press activities, community activities, where we explain what we're doing, how are we doing, come together with the customers. We're doing AMAs, often like sharing our like why we're doing it and what are we doing. And then we have like various different channels where like referrals is one of the things, but this is again like supercharged word of mouth. We are asking our customers for in some program to share our message. We are talking to a lot of people who are associating themselves with various investment, like you guys, effectively talking to the podcasters, talking to the people who are like actually insiders, and asking them to share our message and so on. A lot of that. So if you're going into full like ad stuff, then like I don't actually know how to make it work, and I think there is like really weird problem for us. So you have long-term investors, like the platforms. What we are building means that we generate small amount of money per customer, but we're earning that for a long time, and we're also earning that from many customers. But we are competing with the people who are, for example, trading platforms. And trading platforms, they make like lots of money per customer, but that customer effectively dies in a year. Means that they need to
Churn
make
is
lots of money,
massive,
so so they need to acquire this customer again. So, but that puts us into a weird situation where, for us, it's really hard to compete for a like ad space in Google, because they can pay like 4x more money than us. So we could say that, like, yes, our churn is good, so we don't really think about like in a first year view. Maybe we don't think about 12-month payback. We think about like 5-year payback. But we're still a startup which kind of grows and needs to make money, and we can't wait for 5 years to get that money back. So we need to be in this shorter time frame. So now we're in the situation where we can't really compete with them, and like it also, when we look into like the type of customers who are coming in, they are not like, if you pay for a customer, they're not the best customer. So we can see that the more organic is your customer, the bigger the lifetime revenue from that customer is. Because we have managed to build a product for you particularly that makes sense for you. And if your friend who is similar to you brings them to the platform, then it's similar to your business. If you go out to pay an ad, it's hard to target this particular customer, and usually like revenue is smaller from that type of customers. So my magic is not that I have some channel where I pay money and get a lot of customers. It's more about how do you get your people love your product enough that they're going to go share that with the next set of customers.
We have the geeky questions. So, Mick, please share the screen. How many people? Can you see the screen, by the way? Can you see it? Okay. So
Yes.
I just made an account. Didn't complete my verification because it was tricky. Right now, don't have my passport with me. So how many people who make an account actually deposit money, like percentage-wise?
I don't know the exact number on top of it, but like quite many. Like intent is actually quite high. Again, this comes from this organic growth that most of the people who come to the platform, they already like in the end deposit the money. But yeah, I can't say the exact number on top of my head.
Next hacky question. What is the amount on average, the first investment?
I think like our average account right now nears 10K or so. So like in the first amount is somewhere like in 1,000 or so, and then it goes up from there.
What is the hottest thing people actually buy? Because I went here and I was looking at a stock screener where I can screen, I guess, the trendiest stocks, which is, I guess, Nvidia. And I saw some pre-made, and I like this kind of countries, and I have some
Like a
countries.
filter, or
Yeah, like this. I think these are filters. Yeah, like what is the stocks that people mostly invest when they go to your platform? What is like the hottest thing people buy right off the bat? Is there something like that?
So yeah, so it's not like the hottest things are not company per se. So I think the
products.
biggest things in our platform are SP 500, Nasdaq 100, and World Index, or like something along the lines there. And then you have money market funds, which are extremely popular. And I think like if you're going into the company's point of view, like Nvidia probably has been the best, or like not best, but like one of the most in demand companies in a recent year or so. But it changes also. Like grain metal has been extremely popular for last this year, for example, because every European country says that they're going to start buying a lot of military stuff. So grain metal is one of the rare ones who actually sells that. So
Can I ask a question on this similar area? Weird investing trends. We were talking about questions to ask you. Like, do you see over, let's say, a 5-year period, or also in your previous experience, like some kind of strange, maybe like these psychotic or herd driven, like this crowd mentality kind of driven, and not only trading, like short term trading trends, but also in investing. What's cool or trendy or kind of strange?
So yeah, like I do think that there is crowd mentality in many cases. So I think like Ukrainian war has been going on for a while, but if you look into defense stocks, then they're now going like mental. So
Right.
like if I don't know on top of my head, but like at one point, Rheinmetall and Tesla were like trading in similar PE, which
Wow.
is pretty insane. So yeah, like these are the questions, but like you can see the money flux in. Does it make sense or not? Like I'm not here to judge that. There is, I think like the really popular world. So when we started this business a couple of years ago, then Tesla was by far the number one stock. Everybody was like buying Tesla. Today, Tesla is not there anymore. It's more about like I think Nvidia has effectively taken the position, but like it's not that dominant anymore. It's like they're like top there, but they're not going to be like 5 times more than anything else. So you can see like this kind of changes with the waves. I looked into like customer behavior on the summer, and people like to buy falling knives. So if you read that something drops like 10%, and they're like, "Oh
People
shit,
jump in.
it's probably a good deal," they jump in and they're gonna buy that. Again, like this could be a good deal. Actually, like when I like calculated a little bit, and like at time when I watched people make money out of this, but it can be really dangerous because companies usually when they fall 10%, there's like something wrong with them or
There's a
something
reason.
has really significant has happened. So there might be a problem that's not going to be disappearing tomorrow. So like these kind of behaviors are definitely happening. And I think like if you're going into the kind of dark side or like the bad side of the investments, what I see right now is that there's a lot of scams happening. Like Facebook is one of the platforms where people are buying ads or like articles and whatnot, like that these companies are going to go up. And like these companies are like extremely small penny stocks where I assume they have taken a position and then they're like buying ads like, oh, it's like it's going to be the next best thing. And
So still the
like they
pump
will
and dump
overtake
schemes
Tesla.
are taking place, yes?
Yeah, I think like Facebook is like full of that. Like
Right.
I think it's actually mental. Like go and take your personalization ads down from Facebook, and like the stuff that you see is like quite horrible there. So like we are like constantly thinking like how do we notify our customers if we see something stupid happening. So because like it's rare that like these penny stocks go up like in a reasonable manner. It's these kind of things are quite hostile. So that comes down to the topic again, like we are quite often actually offloading these type of companies from our platform because it doesn't really make sense for our type of customers.
I think a cool thing, a cool mind experiment or a question would be, Martin, if you could go back 5 years to when you started, what would be a couple of things you would tell yourself not to do because you did them to grow the business, but they had no effect.
Like in
What are-
retrospect?
Yeah, in
No,
retrospect.
okay.
So you go back to your 20, I guess, 5-year younger Martin, and you say, brother, don't do this and don't do this because it was not worth it. I think for,
Let me paint you a
for Matis,
perspective
it was
first.
typically the culture thing, right?
Yeah, not
For
to
him
pay
was
that much
to-
attention to kind of these artifacts of.
Yeah. So what are those things for you?
So let me paint you a picture. We started this company, and then stuff started happening. So first thing, Brexit killed our licenses in like 3 months into the company. Then war, stock market crash, massive inflation. I think there's multiple stock market crashes. Everything started getting more expensive. Central banks start raising interest. It's like all this stuff happened, and then like I'm sometimes joking around. It's like 3 years we have built this business, or 4 years we have built this business. We have had 7 once in a lifetime global crises, what hit our field quite significantly. And it's quite insane environment to build anything which you can't really think more than 1 quarter ahead, because you don't know. Maybe there's another war, or there's massive tariff war happening, because everything on tariff wars will impact your business, and so on and so on. So on like regarding that, I think like the things what we have done, what have worked out really well, has been long-term view. Like you try to assess the current situation and try to take a bet, not what's going to make sense today, but where the world is going to land, and where your customers going to land, and the stuff where you want to maximize your kind of profit right away. And most of these have failed. So like give an example, what went really well was world went into weird place. Like all the interest rates started expanding, inflation went up, banks start raising their interest rates and all that stuff, and like life got like quite difficult at one point. And at the same time, we realized that banks are making like fuckloads of money, because all the money what's in the bank, in your current deposit account, they're making like 4% out of that. And this is insane amount. At the same time, while they're making so much money, they're not giving anything back to the customer. And we as a startup, we also need to make revenue. And like this is like a magical new revenue source what we didn't really bank in, because when we started this business, interest was negative. So it was a negative 75 basis points, 0.75. Means that if you have 100 million in a bank, we need to pay for a bank a lot of money to actually keep it there. And now it's kind of opposite. If you're keeping the money there, banks makes like a significant amount of money because the interest rates are so high. So we were like, I think one of the first in Europe said like, we give away most of our revenue. We give back this interest for the customer. So central bank gives 4% or 4.5 or whatever it was, in different markets it's different. We take our 0.75 cut out of that, and we give everything else back to you. And like it was really painful because we give away our revenue, but in the same time, our justification was that if interest rates are up, at one point, most companies need to start doing this. For us today, it's also dangerous to bank in this high revenue, because if you're getting stuck on this like choose what's coming in, and in 3 years' time it's not going to be there, then maybe we built the wrong business because we don't have that revenue anymore.
Did your customers appreciate this move? Did they see that this is a big, well, not sacrifice for you, but did they appreciate that they are given this opportunity to keep?
So I would say 100% yes, because that was, I think we grow like 10 times that year or even more, because customers saw this opportunity. They loved the product. It's not so much that we do good, but they saw the opportunity to keep the money with us and to actually earn a lot of money with like effectively no risk.
Yeah.
So that was amazingly good product. We got more revenue from the smaller charge, because we just grow so much. We had so much more customers, so much more money on the platform, that small revenue actually was like quantifiably more than we would have from a fat margin from the small revenue. So like that was an amazing boost for us. But like give you like an opposite thing what like didn't work out was So quite early, like maybe similar times when we did this, we tried to figure out like how do we get lots of customers. So like that's your topic. Like you want to grow more. Like where do you get like most amount of customers? And we tried some. Effectively, you're gonna buy like referral schemes from like some partner. Not that you're gonna build your own referral scheme, but like some partner will give something for a group of people, and they come in and they incentivize you to be on this platform. It's easy and cool to see when you have like lots and lots of customers are coming in. But at one point, pretty quickly, we realized that this is all shit. Like these customers don't want to be here. They're here to get some whatever referral scheme money out of this. So you get like 80,000 customers. And now you have two problems. One is you waste a lot of money because you need to pay for these customers. They don't really want to be here because they're going to churn away at the moment they're going to get their reward. But also they're like vocal customers who will give you a bad advice. Because like we build our product in a way that we talk to the customers and try to figure out what they want, and then we build them something. And now you have lots of people who don't want to be here, are not our actual customers, have a wrong incentive, giving us a bad advice. So effectively, at one point, we realized this is all doesn't make sense, and we like I don't know if you can say like fired effectively these customers. We didn't count them in anywhere because they're gonna leave anyways. We closed all these programs and decided that we don't count them into our like any of the metrics, but also we don't ask them any advice because that's not actually our customer. And like these are painful things because you have lots of pressure to grow the business, but you need to do it in the right way.
Martin, I think it's a good question is how do you talk with your customers because you have a tech startup and most likely you don't do quality interviews. I can imagine that maybe you do, but tell me, how do you talk to customers and how do you find out what actually they would want?
I think it's hard. It's easier question than answer. I do think like talking to the customer starts from the culture, because it's not that you have a person who goes and talks to the customer. It doesn't really make sense. You personally need to go and talk to the customers. So like I can give an example. When we started this business, I already shared, we talked to many customers. I'm still talking to many customers in every event, anywhere. I'm constantly trying to figure out what makes sense. Converting everybody around me using the product and trying to understand how to make it better. I'm reading every single CSAT comment. So we are asking customers feedback on the product and give the rating and comments. I'm reading all of these. I'm reading every single Trustpilot still. So I have quite massive flow of information coming in. But it's not only for me, but like this is actually public. So it means that everybody in our company reads them, or like not everybody reads them, but like a lot of people have an ability to read them. We can see a lot of engineers are picking up like comments like, oh, this doesn't make sense. This is something is broken. We'll go and fix that. So this is kind of the part of the culture. Customer support sees so much of the customer feedback, so feeds that back into our business regularly. And we have a research team which goes into more kind of longer, bigger decisions and trying to figure out the satisfaction in overall, in particular market, in particular product, in particular customer segment, where we're gonna effectively every week we have some overviews like these type of customers are happy, these are not happy, there we need to improve, and so on and so on. So there's a lot of stuff what happens, but it's I think part of the culture, but also like part of the processes everywhere.
Can we switch topics a little bit to talk about your experience in Wise? Tell us how your career progressed in that company and how that experience has had an effect in your current role as a founder in Lightyear.
It's a weird one because, like, good stuff sometimes happen to you in a life. So I didn't plan to join Wise. I was working in a team what was bigger than Wise. My budget was bigger than Wise had ever had money. I was doing important stuff in kind of Estonian world. And I was quite baffled at one point when Krista, who's the CEO and founder, reached out and was like, hey, like, I would like to do things and whatnot. And then we start talking. And I realized that the smaller company is probably much bigger than the big company where I am right now.
And the big
like
company you
why
were
is
there
that
was
is
ST Energy.
yeah, ST Energy
Right.
is like the government biggest energy company in Estonia. It was fully it was monopoly actually. They mined shale oil, they burned that, they transported electricity, they sold the electricity. Actually, one of the projects while I was there, I was a part of the team which kind of demolished this monopoly to make sure that there can be a free market. So we did that and government, country level important stuff. But then you realize that while it's really, really cool and big, the people and the attitude and all this stuff thinks about less than 1 million people and thinks about the products which are actually quite niche if you kind of zoom out in a world scale. So if you go into think about what Wise wanted to do, and back then there was almost nothing, but idea was you effectively build a product for every person around the world in every single market. You move all the money flow in the world into one platform and all this stuff. And then you realize that a lot of stuff what you do every day is unnecessary. So we go through our lives, argue over some things, and it's all pointless because it doesn't really move the customer experience or product or your growth significant manner. Maybe it grows couple of percentage, but it doesn't matter. You have to grow 3 times, 4 times, 10 times to actually get into the world scale. And I was really baffled when I saw Krista and Pavet who were we're gonna change how people move money around the world. And then you realize it's not bullshit. It's actually they know how to do it and they have understanding what needs to happen. And their attitude is not to do a couple of small things, but take serious things and actually build them properly and understand customer properly. This customer thinking is one of the kind of strongest things what I got them from Wise, because Estonian Energy made all these massive changes. I don't think we really spoke to any customers at the time. We did after the product research, our customers happy or not, but who cares? You are in monopoly, who cares? But if you're building a product in 100 countries in the world, you need to figure out, do these people care? Do they understand what they're doing? Because it's really arrogant to think that Latvians think exactly the same as Estonians. They don't. Or even worse, you think that you understand how Americans do things. You don't. I have done so many mistakes. I think we launched Wise 5 or something times into the US thinking that you understand, but then you realize things what are okay for you or normal are not normal in the US. It's different, slightly different things. But if you are a weird thing in a money service business, then people don't want you there. So there's a lot of lessons around that. So effectively scaling, how do you do things, how to think about customers and so on. So I joined Wise, what is that? 2012?
15 or okay.
16? Something like that. I actually can't remember. I think it's 2012.
Early
and
days.
we tried to figure out so we had 10 people or so. We tried to figure out what is the product, how do you do that, how do you scale, what is the purpose, and so on. So it's a lot of figuring out, but team wise, we grow a lot. So I joined, there's 10 people, and then next year is 100, and then after that it's 300, and then 700. It's the company bloomed a lot. Different times, different kind of view. So really, really good experience.
Amazing. Just slightly different question. In terms of VC funding, you have VC funding, right?
Yeah.
Yeah. How do you keep cost discipline when you have, relatively for Baltic standards or for the standards of businesses in our region, a lot of money coming in from your VC investor? How do you not go crazy when you've landed a multi-million funding round?
Yeah, it's a good question. It's easy to go and spend the money and then come up with nothing. I do think that I got a lot of experience in Wise and lessons what makes sense and what doesn't, and how do you think about money. It's I think the basic things what you need to figure out is that what is your kind of costs to run this business and like where can it go. So you can spend money on the stuff what will help you in the future. So give an example. I'm more than willing to spend more money into building extremely expensive and difficult infrastructure because for the next 10 years, it's going to give me something back. If I'm putting an ad out there, then this ad is effective just the time when it's actually out there. And the moment it's down, nobody cares about that. So you think about like a product investment versus kind of short-term investments, which will carry you a revenue for a longer term. Then you need to figure out what kind of type of the business you want to build. So I think in Wise, we hired extreme amount of people in a really short period of time. And most of these people were doing it like, if not the first time, then like they're like early stages in their career and learned a lot. There was a lot of motivation and stuff. And like, I appreciate that a lot. I think in Lightyear, we have been focusing a little bit differently. We say that we don't want to hire so many people. We are like actively trying not to hire because we have been trying to get the team, which is kind of world class and understands already how to build the systems. And in this way, you're able to also avoid many mistakes what you're doing when people are like doing it first time. And like, as we're building rather complicated systems, we want to make sure that we're building it really good in the first go, but you also need to make sure that you're not going to overthink it. Like this is kind of the bank problem, is that you take a project and then it takes a year to get out there, extreme costs around it and so on. So we need to put it out there in next month, not the next year. So effectively you hire people who have been in a scaling environment, has done this before, and are able to launch this stuff and make less mistakes. And then you have kind of core cost discipline. If you are able to, if your model makes sense without raising money, then I think you're in a good position. If your model breaks down and you constantly need VC money, then I do think you need to rethink a little bit what you're doing, especially in these worlds. Like VC money today is pretty tricky. So if you look into the VC funding, like in the Baltic states in the last 3 years, it's dramatically changed. Not many people have been able to raise money. They're not able to raise money because their business doesn't make sense in a unit economic point of view. Also, like shift in access of the capital for VCs themselves. Also, dynamics of like today, like a little bit jokingly, if you don't have an AI part in your business, then it's really hard to raise money. So there's a lot of kind of dynamical changes happening at the moment.
But your business doesn't have any AI in it, right? Or has it?
Pure AI. Come on.
We actually do. Like, so we are. I can't say we are definitely not like AI native company, but like the way to think about it is, so like AI itself is not going to be a product. AI is like more like an internet, which gives you a lot of power to do things. So it's like early days of internet, like people dabbled around and there's some benefits, but like didn't really know. You didn't know how it's going to work. But like in the end, I don't think you're able to build a product or a company that doesn't have an AI component in it because you are not competitive or your customers are not satisfied or so on. So give you an example, we have replaced some internal tooling, which was extremely expensive. We needed many people to run every single day, some stuff operationally to make it work. Really unflexible kind of companies. The big companies were providing us that service. And then we took a couple of engineers, really smart guys, built that on top of the AI, and we were able to get rid of 2 vendors. We don't need to hire 5 more people, or actually much more people when we're scaling. And the own cost of this product is more than 10 times lower. And at the same time, the quality went up like significantly. Amazing. So now you're in a situation where if somebody else starts to build the same product what we are building, and they're going to use the vendors, means that they have a significant cost because they don't have this AI capability tooling themselves. So this is one part. You can see that you can do much more work without paying more or without humans or whatnot. That enables you to be much more competitive. Or you have like the front end stuff where we are right now giving you lots of information about markets and portfolios and everything around that, and making it kind of human readable and understandable. But like, I'm pretty sure that soon, like investing, there's going to be a part like effective self-driving car. So you say that I want to go there with my financial state, and then we have a model what helps you to do that.
All right, so let's imagine, Martin, that we're in a psychotherapy session. And the question is, what are the weaknesses that have held you back in business? If you kind of introspectively want to be honest with a lot of people online.
Weaknesses.
But
I think
the answer doesn't count if you
this.
say I just work too much. That's not how it's gonna go. No, just like actual things that.
No, I think like we have this interesting dynamic with our co-founder. Like, I think we are both really strong in some areas, but we're both like weak in opposite areas in that sense. So like, while it's often difficult to kind of figure out where do you need to go and like find one direction, but in the same time it helps you a lot to kind of be in one place or another. If like somebody, it's your weakness, I can jump in and whatnot. Same like vice versa. But like for us, while I think we are quite fast doing things and decisions and so on, we still, I do think like we have a lot of this paralysis, making decisions, trying to figure out how to. I think the best thing what we have done is that we launch early. We put the pressure on, we launch early, and we understand what's going to happen. And you're still weekly, daily, are trying to convince yourself not to launch early because you're afraid. You're afraid what's going to happen. You're afraid to break things. You're afraid to make mistakes. And this kind of challenge is quite tricky. So yeah, like I think there's a lot of things, but I think this need to find the courage to make a bigger decision sometimes.
For you, was it true that I think there's like this LinkedIn founder told that if you're not embarrassed about your first product MVP, you launched too late, right? Were you also
like no. More like every single launch for us has been like that, and it's like the reason the dynamic why you do that is actually quite simple. So you launch. So I'll give you like practical example from our product. So it's we launched business accounts, and business accounts are extremely complicated things because if you're a human, then it's your money, you have one-to-one relation, you have an accountant, it's you a person, and I can validate and everything around that. But if you're a business, I need to figure out like who actually can make a decision, what's your who can open an account, whose money is on these accounts, and so on and so on. So it's like the stuff can be extremely complicated, and also every country has their own kind of set of laws and regulatory and so on. So it's easy to think that you're not able to launch this product because you have to build all of that to make sense. For us, we decided that we're going to launch business accounts, but for one market, only for businesses in some real specific domain, only businesses who have one founder or one director, and like the list was on and on and on. And then we were able to build a product which was super easy. Like I think the fastest business onboard in our platform, like in 24 seconds or something like that. Oh. So you can click, and you're on the platform. But most of the businesses can't use you. Means that there's like a lot of people are like, like why are you not letting me in? I have all this stuff and blah 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 blah. So we got a lot of shit because of that. But in the same time, this is extremely good because we had identified one target customers who wanted to be on our platform, built okay product for them and really bad product for others. And now all these people who came to us said like, I need that. Why are you not building for me? This is a feedback from the customer. And now I can quantify what are the types of the businesses want to be our platform and why they want to be here and what are the problems and so on. I got this feedback in. If I would do it in a way that I'm going to try to build a product for all businesses, I would probably spend like 2 years building something and probably be wrong thing what I'm going to build, and I'm also going to miss the opportunity. So it's always painful, but like that's coming back to the topic is like you're always scared because you launch a product and then people come in and it's all shit. So like how do you balance this? Where is the right time to launch it?
Martin, my last question is about let's say burnout. Have you had experiences in your career? You had great times in various companies and now with Lightyear, and you've been in business for a sufficient amount of time, for a long time. Have you felt like, okay, like I'm getting tired, I've been there, done that, I've seen so many things, I've been part of extremely high growth companies, big businesses, etc., and it doesn't give you maybe this the satisfaction, the drive that it may used to give you, or that there's burnout, that there's so much stuff going on and it's all on your shoulders as a founder that you've found it tough to deal with?
Yeah, I have burned out actually. Not in Lightyear, but I burned out in Wise. That was really difficult because I extremely like the company and the product and team and everything. And it's also like financially in a really nice place. But it turns out when you travel around the world every single week, you work 24/7, you don't really sleep properly, you don't eat properly, maybe you party too much. At one point it will get to you. It's like seems no-brainer, but like this is often the thing what people do is like you burn the stick in both ends. And like I think in 1 year I looked into that. I was more away from the home than in the home. No any sleeping schedule, really bad eating schedule, like working too much. And after work, my kind of relaxation was being out with team members in a bar somewhere and so on. And at one point, I think it was really difficult at the time to figure out what's actually going on. But like my thinking was like, I don't want to do that. And like took me quite a long time to figure out like what actually happened. It's like it wasn't that I don't like the company or people or whatnot, but I was just so tired, and like taking a vacation for like 3 weeks doesn't really work. Like you need to be off for a while, and then you realize like, oh, you should sleep well and should eat well, and maybe don't drink too much, and maybe you should have like more stable life in some sense, and you can still do a lot of work and you can still kind of put the focus in, and maybe you're even more productive, but you need to take care of yourself first. I think that's that's definitely a lesson for me.
The last kind of funny,
and I think it's simple actually.
Yeah, when you
it's actually pretty simple.
right?
I think like you prioritize sleep first, exercise, and food. If you figure these things out, then everything else falls into the right place. But sometimes it's hard to get to that decision.
Now the more funny part for the end. If we and Matis go to Estonia and you had to take us on adventure, what kind of adventure would we do in Estonia?
Adventure in Estonia.
Doesn't go together, these two words.
And of course, we will go to your office, but we need other adventure also.
So I have a 2-year-old and a pregnant wife. So like my adventures are mostly in home with my kids. Like where you can go. Like I think so Estonia and Latvia, I assume are like pretty similar, like more this kind of nature stuff and whatnot. But like you can do I think there's a lot of stuff that you can do on water. You can go jet ski. There's a lot of like dirt bike stuff. Like it depends on adventure what you want to do.
Oh.
Yeah, so I've been like before the kids, I was like big into motorcycles, like enjoying the dirt bikes, street bikes, and all this stuff, skydiving and everything around that. Today, I'm more trying to figure out how to make a proper hairstyle for my 2-year-old daughters. So it's different life.
Actually, Matis just recently finished the Romaniac. I'm pretty sure you know what that is.
You know the hard enduro rally in Romania. You go in the mountains for days. Yeah.
Cool. So
I did ultra running at one point. So that was like my thing.
So
like if you want to relax, then definitely go and do that.
Cool. Last thing, what would be your kind of I guess last recommendation, last advice to any Eastern Europe Baltics founder so they have a much better business, more, I guess, more profitable, more bigger. Like, what would your advice be for them?
Yeah, I think there's like theoretical and practical stuff. So I think like theoretical stuff, like I really enjoy reading about how really successful people in the world make a business. And like it's like it or not, like Elon Musk's and all these type of people, like why they're doing stuff and how they're thinking and so on. Like read all the books and like make sense. But like I think practically go away from Estonia or Latvia or Lithuania or whatnot. Come back. Like I enjoy living here, but it's quite eye-opening if you see how business is done in India or Silicon Valley or UK or Germany. It's quite a different beast because like in Baltic states, like you kind of know everyone. The market is tiny. You have an easy way to get access to the stuff, and also your business is going to be small. If you go to Germany and see what's happening there, then you realize you don't know anybody. Even if you're like local, you still don't know most of the people there because there's like 80 million people. There's massive competition, but also people think differently. They think about how do you make a step change, not an improvement. What types of risks are okay to take? People like to dream. Like if you go to Silicon Valley, sometimes it's like quite shocking to see how maybe dreamy are the people in some ways. Yeah. But in the same time, you understand they don't solve this tiny problem somewhere. They try to kind of go with a bang or make it. And these are really cool things. Like I think the truth is somewhere in the middle, but like we wouldn't be in this business today if we wouldn't think quite aggressively. Like having a European central bank account, like as nobody has ever done that, like why they haven't done it? Mostly because they don't maybe know that it's possible or don't know how to use it. But like if you want to do that, there is usually a way to make it happen, and that changes the business what we do. We decided to launch 22 markets at the same time, which I think everybody said that it's insane thing to do. But today it paid off a lot because some of these countries are like doing exceptionally well and we understand so much better. So these kind of decisions are often the payback is much bigger than saying that, oh, I'm going to launch only in Estonia and I'm going to learn from here. And then I'm going to expand into Latvia. And then I realized like Latvians don't think like Estonians and you have different tax system. And like, it's like, product doesn't work. So like go into Estonia, Latvia, Lithuania, and Poland as well. And then like you see what actually makes sense. So yeah, like expand your mind a bit.
Cool. Thank you, Martin, for your time.
That was amazing. Very good insights.
Wish you to get to 100 billion as fast as possible. Yeah. 1 trillion.
100x.
Yeah.
Let's go. Thank you for joining. And hope to see you in Tallinn, I guess.
Yeah. Thank you, Martin.
Yeah, come and visit us. Thanks, guys. Bye.
See ya. Bye.
Cool. It was nice. Very nice.